topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Welcome to the Ask Good Questions podcast, broadcasting live every Wednesday, 6 p.m. Eastern Time on W4CY Radio at W4CY.com. This week and every week, we will reach for a higher purpose in money and life, as well as a focus on health and wellness. Now, let's join your host, Benita Bell Anderson, as together we start with Asking Good Questions.
Welcome to the Ask Good Questions podcast. I am your host, Benita Bell Anderson. And today, as things usually happen in life, something changed. The guest I was going to have on with me today had a family emergency. So it's you and me, baby. We're doing this all on our own. And we are still going to talk about the topic at hand because I am fully qualified to talk about this as well. So today's title of this episode is called Tax Season Zero Panic, Get Organized Early and File Without the Stress. So if taxes make you tense, maybe because you're thinking, I haven't even started yet. It's usually not the math, it's the mess that you may have unintentionally created for yourself. So we're going to break down exactly what to collect, how to sort it, how to stop second guessing what might matter before you file your 2025 tax return. So we're going to talk about some practical steps, a sanity-saving document checklist that you can have, and a mindset reset that makes tax season hopefully feel a lot more manageable for you. So with that, we are going to be looking at some PowerPoint slides today. And so we're going to have some strategies, some tools, and some best practices for you. So here's what we're going to be talking about today. Understanding some big changes that happen in 2026. Now, I want to direct you to when did we do it? I think it was in January that I did an episode with Marcia Mantell on the changes specifically for seniors. So that, you may have heard about the big, beautiful bill. You may have heard there's no tax. No, the whole thing with no taxes is not correct. There's just extra tax credits that you're getting this year. So we're going to talk about gathering and organizing essential tax documents. We're going to talk about tax preparation tools and services that you might use. We're going to talk about strategies for tax planning and optimization and avoiding the most common pitfalls and ensuring that you have compliance in all of this because you don't want to get on the wrong side of the IRS. I can tell you that from my life, it's been an ongoing journey for learning how to deal with this every year, learning how to make it simpler for myself. And I can tell you that for me, I have used a CPA for doing all of this because of the complexity of personal taxes as well as business taxes. That's kind of changing for me. Things are becoming a little bit more simple. In the future, I'm going to be using something called TurboTax. So we're going to talk about that. We're going to talk about brackets and deductions and credits and exemptions for you during this time today. So there are some adjustments to corporate tax rates and revised capital gains taxation. You know what I'm going to tell you too is that there is so much online. If you go to, I call them affectionately Dr. Google, or if you go to ChatGPT, you are going to be able to ask for what is the current federal tax rates. You can go and do this on your own. There's eligibility rules that have changed for key deductions. And there's new reporting requirements expanding compliance expectations for things like crypto and other digital assets. I'm not going to get into that sort of thing in depth. I overall want to give you some strategies and some ideas for just starting to pull this all together so that it's easier. So the standard deduction increased up. It's up 6%. So they're calling them inflation adjusted brackets that generally raise income thresholds, itemized caps, and it may shift itemization versus standard decisions. So you know what? In many, many cases, and I know this applied to us, for me and my husband, we're not really itemizing anymore because the standard deduction that you're getting is way above whatever we might have possibly been able to itemize. And so that's something that should be simpler for you now. So there's other things that, they just kind of go up a little bit every year. Child and dependent care. There's expanded eligibility and a higher maximum credit for families with qualifying dependents. You may notice I'm kind of talking about things in more general terms because, everybody's situation is so different. And so we're just going to talk about some of the big things that may apply, may not apply to you. So the earned income credit, there's updated eligibility criteria to allow more low-income workers to qualify. So that's a pretty cool thing. And there's education exemptions. There's higher exemption limits for tuition and related expenses to encourage education investment. So those are all super cool things. So organizing tax documents. Probably the easiest thing is throwing receipts into a shoebox. I'm hoping you haven't done that. And really, that doesn't really apply anymore, does it? Because if you really don't need to itemize that much anymore, then what's that going to do for you? So hopefully, if you haven't done it before, start doing it now. Start having things as you get them, put them into a tax file. Now, I still like to have a paper copy of something to look at, but I have my digital, I have my tax file on my computer, and then I have in my file cabinet thing that I have at my desk, I have a taxes folder that I'm putting everything in, okay? And so then I organize things according to income and things that, like bank statements that have the information about interest earned, dividends earned, investment, like year-end statements for investments is important because of possibly for required minimum distributions if you're over 72, 73, right? So here's some things, so let's go into it a little bit more depth. Income and employment records. What does that mean? Well, if you have a job, that means you're getting a W-2. That company that you're receiving that W-2 from is going to have some statements for the year end, okay? So you're going to collect that. They're going to be giving you a tax statement that tells you what the totals are for 2025. 1099s are like if you're self-employed, you're going to get what's called a 1099 NEC. Those are for more self-employment type jobs that you might have had. You're going to receive a 1099 for that. And then you have things that are like 1099K. So there could be some different 1099 type things. So file all of those together or put them all together in one place so that you have that, because all of that sort of thing is going to go on the on your tax form in one place at the very beginning of the form. All right. So the other thing that you're going to have to start trying to figure out is what's going to be taxable and what's not. So one of the things that lower income people have available to them is like going to the library. So if you do not have a bookkeeper, or if you don't want to do it yourself, or if you have some kind of situation where this is just not going to happen for you, contact your local library, find out what you can do. A lot of times in the past, the H&R Block have set up times to help people with their tax returns at the local library. Okay, so go and see if that's available for you in your area. Okay, deductions. If you have a business, I mean, I've been a business owner my whole life. I have had some kind of business ever since I was in my 20s. And so business expenses, especially, really, that's the only thing. You need to keep itemized receipts for travel and meals and supplies. And you want to have what the business purpose was and the date to each record. All of those things are then going to go on a special tax return for your business. And if it should be the type of business where the income and expenses flow to your personal tax return. But that's one category that if you, like for instance, TurboTax can be a good solution for helping you organize what's a business expense and what is a personal expense. Medical expenses. If you are unfortunate enough to have to deal with some fairly large medical expenses, store those receipts and the invoices and the insurance statements, because you never know, you might be eligible for some medical and dental costs. So keep track of that. The other big area is going to be charitable donations. Again, I'm not going to be telling you about all the ins and outs. There's crazy things you can do, like sending a distribution from an IRA can go to a charitable donation, and that doesn't add to your personal income. But I'm not getting into that. I'm just saying for charitable donations, again, maintain receipts, acknowledgement letters for those donations, and proof of payment for every contribution. You never know when you're going to be able to use a charitable donation on your income tax return. And then, of course, there's other deductions. There might be deductions for education costs, mortgage interest, and other IRS required deductible items. It's hard to tell. What I just want to do today, and what I do every time with the Ask Good Questions podcast, is give you something where you can go take some action. You're either going to go get some help with like an online tax gathering program like TurboTax, or you're going to go to the library and you're going to find out what help you might be able to get there, or you're going to gather things yourself, or you're going to, find out where, maybe you have somebody that can help you with all of this as well. So let's talk about investments. Hopefully you've been, if you've been listening to me, hopefully you've been paying attention to doing investing, making sure that you have all of that. That's going to fall into two big categories. One is going to be bank statements. The other is going to be investments accounts. Now, like for me, my wealth management company is called 10Cap. We have a custodian called Altruist, and through that custodian, we get investment statements. All right. So you're going to gather brokerage and retirement account year-end statements for all of any type of accounts that you have. The only thing that's really going to matter on investment accounts is those individual retirement accounts, right? That means that if you are of retirement age and you have been taking distributions from a retirement account, that counts towards your income. And hopefully you've been sending a little bit of taxes to the IRS, because they take whatever income you've had during the year plus those distributions from an IRA account to factor in how much you're going to need to pay for taxes. So it's important to have your investment accounts. And then you got bank statements. Now, bank statements are going to be like interest, 1099 INT, You're going to identify gains and dividends from banks, and you're going to use those statements to show capital gains, because those are all those, even though they may be smaller, they're all, little bits of income here and there. So that's all income reporting that you have to do. The other type of INT, not INT, but 1099 DIV, those are dividends. That might be dividends coming from a regular investment account, okay? And so those are three very likely places where you're going to be looking for some kind of statements, either from banks or investment companies. So you're going to confirm retirement contributions. If you've had retirement contributions to a regular IRA, though, those contributions can be deducted from your income, right? If you've been making contributions to a Roth, you are not. You're being taxed on whatever that income is this year. But then down the road, when you start drawing in retirement from a Roth IRA, then there's no taxes that come out of that. So you're going to confirm what kind of retirement contributions and documents that you need for those types of things. And just, try to get yourself into a space where you prepare for these types of things. A lot of times when people say, I hate taxes, what they're really reacting to is either they don't like doing math, or they have a fear of mistakes, or they're feeling disorganized. So the information in most cases is just likely scattered, right? So what that looks like in real life is going to be not having everything in one place. So I'm just going to stress that to you, that if you haven't been putting all this in one place, you're going to start now. All right. Because the hidden cost of tax stress can be losing sleep over this. You can have arguments with your partner, procrastination, missed deductions, things like that can all, happen to you. So I'm trying to help you so that you don't do that. So we're going to talk a little bit about tools. So there's a lot of software options out there. You know already that AI is coming on board in a big way. And so there's a lot of things that should be making your life easier. Like one of the first things I'm mentioning here is guided workflows that reduce effort and error. So I've already talked about TurboTax, and I've already talked about H&R Block. They are strong contenders for helping with a step-by-step filing process for you. So AI is getting into everything in our lives, isn't it? There's a lot of guidance now with AI. AI is kind of being incorporated into all kinds of things, including tax software. So there's accuracy guarantees with those sorts of things. Bank integrations are going to help with making sure that banks are giving you good information. And TurboTax, again, is strong on integrations. I'm not affiliated with TurboTax in any way, shape, or form. I'm just, this has just been my experience. So the cost for things ranges from free for software based, up to premium tiers that have to do with helping you with complex business tax reporting. Tax Act is another software that is often a value leader on paid plans. So the thing that we all want to avoid is audits from the IRS. And so these things are going to help you with online guidance to help you to avoid anything like that. And H&R Block, like I mentioned, it's possible to go to a library and meet with somebody. So H&R Block also has offices where they add optional in-person help. So you never know. So, basically, if you haven't really gotten started on your taxes, but I've got to do it, I've got a month until it's due, we want to have a no panic tax season. We just want to get things organized and go through it methodically. And you want to have some rules for yourself that you just make time to make sure this is done correctly. All right. So here's some ideas for self-prep versus professional help. Self-preparation is going to cost you less. You already know that probably. It's cost-effective and convenient for simple returns, and it offers control and flexibility for straightforward finances. And so self-preparation cons is might be a risk of missed deductions because you're not aware of something. Another reason to use some kind of help like TurboTax, or having somebody who can check over your work and make sure that you have not missed something. You don't want to have any kind of errors because really, if you're going to get into any kind of unique tax situation, then it's probably going to be best to have some kind of bookkeeper or CPA to help you. Now, what about, those are the pros and cons for self-preparation. What about professional help? So the pros for using a professional help is expert guidance, right? For complex returns, maximizing deductions, minimizing audit risk, personalized advice, and really at the end of the day is going to be peace of mind. However, the cons for having professional help is higher upfront cost. So if you're going to have somebody helping you, you're just going to have to plan for paying for their services. So you're going to have less hands-on involvement, and it may require extra documentation and communication. It's just something that, you're going to have to make a decision on what is your situation. And like in my case, things are changing. Things are a little bit less complex. There's more help that I can find on my own. And so, you have to see what's going on. Now, the other interesting thing is the IRS. The IRS really has quite a few online tools. You can go, like there's a tax prep sheet. If you go to irs.gov, there are forms and instructions and interactive assistance that support common filing and compliance needs. It's really, there's actually very surprising amount of help that you can just go straight to the IRS, and you can look at your own online account and view records and payment status and IRS correspondence in one secure portal. So I think no matter what you're doing, you should look at what the IRS has available. Security is important there. Usability upgrades are increasing adoption for do-it-yourself filers. So just realize that they are trying to be more helpful. They're trying to do what they can to help the regular, ordinary filer of a tax return. So let's see, let's go on. Tax planning strategies. Well, if you have a small business, or if you are working for somebody else, either way, you are your own corporation. That's something that I learned a long time ago, is I need to take 100% responsibility for myself. So let's look at this. Time, income, and expenses. Forecast your cash flow. Look at what your income is. If it's variable, look at and plan for ups and downs with income, and plan spending by month to see timing options. You may, if you have some situations where your income ebbs and flows, then you need to plan for the dips with some savings, right? So you might, one thing that can happen is you can defer income, shift receipts into 2026 or 2027 when it improves bracket positioning or credit eligibility, if that is possible. but that is something that people do. Number 3 is to accelerate deductions. You can pull deductible costs back into this year's tax return to lower taxable income when it delivers higher value. Sometimes, though, these types of strategies does require a CPA, does require somebody who prepares tax returns. But the number 4 thing on here is to recheck tax impact. Model timing changes against brackets, credits, liquidity to maximize net benefit. What that means is one example over the years that was very common for me to be helping people with was converting a regular IRA into a Roth. Well, like if they took $20,000 out of a regular traditional IRA to move it into a Roth, that means that you're adding $20,000 to this year's taxable income. If you have a situation where your income is down in other areas, it might be a good time to do that. And then move that $20,000 into a Roth. You pay the taxes on it now, and then once it's in the Roth, it's going to grow tax-free from then on. So I'm not going to say a whole lot more about that, but that's what I'm meaning, is that you can look at what the tax impact is on doing different things and seeing when it makes sense, if you have some flexibility on what's going on with your income and how much taxes you pay every year. So, deductions and credits. Maximize your credits if you can. Track your tuition, your fees, your related expenses, maybe for somebody in your household if it's not you. There are different things that you can get credits for through the American Opportunity and the Lifetime Learning Credits. Healthcare, like I said at the very beginning, the deduction, the standard deduction is large enough now that maybe it's not going to make sense. But if you've had some significant medical expenses, look at if it makes sense to itemize those to help you with your taxes. Energy credits is another area. So, are you getting solar panels on your house? Make sure that you document home improvements and energy efficient purchases to claim credits for solar, for wind, other renewable upgrades. You never know. If that's something that's in the works for you, then make sure you have all your documents for that, because it could make a difference. And then, of course, retirement contributions. We've talked about it a little bit, but contributions to IRAs and 401ks, that is all deductions off of your income. So make sure, again, we'll just say, coordinate timing and amounts to optimize the deductions that you get and the credits that you get. And then there's something called phase out thresholds. Stay aware of income limits and phase out rules for each credit and deductible and deduction to plan eligibility. So you can download the levels at what, like there's so much income for the 10% level, and there's so much for the 12, and there's so much for 20% taxation. So look at what your thresholds are for making sure you don't jump yourself into another tax bracket. So the last thing on maximizing credits is strategic coordination. All right. Align your expenses and your income with the tax year requirements to maximize overall benefit and minimize tax liability. Kind of the bottom line on all of this is just to minimize the tax liability. You're going to pay what you rightfully should be paying, but you're going to minimize the tax liability. So there's going to be things that you're not sure about. And so if you're not sure about something, have maybe a special envelope that you put things that you're not sure about, and then go find someone to help you figure out what the questions are that you need answers for. So quarterly planning, that's probably been the best thing for me for peace of mind is paying. If you are like self-employed, a taxpayer, and anyone with like material non-wage income, you should estimate and remit payments quarterly to reduce underpayment penalties. So I've seen that happen before. Having an underpayment penalty, just make sure if you get things organized so that you pay your taxes on a quarterly basis, if you're a self-employed person, then that's going to go a long ways towards helping you with peace of mind that you have remitted payments to the IRS and they know that you've done it in good faith. So start with your prior year income and your prior year total tax that you paid. Then adjust it for your projected income and your deductions and your credits and the tax law changes before setting your quarterly amounts. You can kind of figure out what it is that you need to do. And then pay on time. Just make sure that every quarter you use IRS online payment options. That's all there for you to check out at the IRS as well. And set yourself reminders and alerts to meet those deadlines. And then make sure you retain confirmations to support reconciliation at filing time. Okay, these are all just smart strategies to help you with not making any mistakes. So you're going to avoid these common pitfalls if you have accurate filing, audit, things to avoid audit triggers. It's been several years, many years ago that I was audited. What a pain that is to have to go back and pull out everything. And it's kind of like, you kind of feel like it's your word against the IRS's. So make sure that you have accurate filing, that you're not triggering an audit, and that you have effective responses, and that you have your documentation. It's up to you to have your documentation. So of the tax returns that do experience that, there's usually math mistakes, there's missing forms, there's inaccurate Social Security numbers. Can you believe that? Or unreported income. These software programs that I have mentioned a couple of times here, like TurboTax and others like it, they have error checks. They also usually have an actual person that you can pay a reasonable fee to have a professional review. That is also going to reduce mistakes and avoid processing delays and audits. Okay, that is critical. So, April 15th is coming up. Don't wait till the very last day, right? Don't do that. Get this done. Set the time aside. Double check your amounts. Reconcile your income, whatever deductions you think you may have coming, your whatever credits. We talked about those credits. Confirm the totals before you submit things. All right. Make sure you have your Social Security number, your taxpayer ID correct. Check your names, Social Security numbers, and filing status for exact matches for official records. Okay. And usually filing electronically, and then if you do have a refund coming, that's going to come back electronically. That is going to save a whole lot of time too. If you file electronically and save confirmation receipts and keep supporting documents for at least 3 years. Now me, I keep things for like 10 years before I feel comfortable getting rid of it. But a lot of what I have is now online anyway. And so I have digital copies of things from several years ago, just because once I get rid of any paper, I don't like to, it's hard for me to completely let go of it. So I make sure that I keep it because once in a while I've needed to look at something. So you want to keep your nose clean when it comes to the IRS. How do you take care of audit triggers and responses? A common audit trigger is going to be discrepancies in reported income, unusually high deductions, and mismatches with IRS records. Okay, that's going to trigger things. So make sure that your info is correct. There's red flags to avoid: large business losses, excessive charitable contributions, inconsistent reporting. All of this is solved by having realistic, real records, right? What are the risks? Well, the potential risk could be increased scrutiny. You could be subject to penalties and possible reassessment of tax liabilities. Oh, what a waste of time that is if you get into those sorts of things. So if you do experience this lovely problem with the IRS, respond promptly, please, 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 and organize your documentation to speed the audit resolution. These are, the people that do audits, they're employees of the IRS. They're just doing their job. So try to get through it as quickly as possible. So you want to prevent, this is not about perfectionism in thinking that you've got to have everything perfect, but strive for just being accurate. Strive to have things where you know where things are and keeping it, sane and in control, that you know where things are. So I'm going to finish up now with just telling you these things. Stay informed. Track the tax law updates. If you are of Social Security age, Medicare age, go back to the podcast episode from January with Marsha Mantell. We discussed in particular the tax law changes for seniors. And so you don't want to have any surprises when it comes to this kind of thing, so that you can file with confidence. Organize your records, organize your records, organize your records. Maintain clean documentation for income, deductions, and credits. All right. Use the right tools. Choose software or professional support that fits who you are, fits your situation, right? And plan and comply. Avoid common errors, follow requirements, and optimize your outcomes, okay? This is just something that, we have the IRS for a lot of things that we take for, take for granted in this country. You're going to pay your fair share, but you don't want to make unnecessary mistakes. So we want to make sure that this can be a process that's faster and cheaper and less stressful for you. And so with that, I hope I've answered some questions. I hope that you can, if you haven't gotten started, that you start today. Get this done. Don't wait till April 15th. And if you have any questions about this, I am going to have this list on my bonus downloads on my website, BenitaBellanderson.com. You can find the bonus, the downloads, and I'll have this tax prep checklist here for you there. So with that, thank you so much for attending and listening for our tax prep workshop today on the Ask Good Questions podcast, and we will see you next time.
Today's episode is over, but we did ask good questions again, didn't we? Don't miss out as we broadcast live every Wednesday, 6 p.m. Eastern Time on W4CY Radio at W4CY.com. Join Benita Bell Anderson next week for more conversations with experts on finances, retirement, behavioral finance issues, health and wellness, and more. Until then, remember to ask good questions.